Hey traders, Raghee here, and in this free video we're going to talk about EWH. Now, one of the things that we did in the premium video last night is we talked quite a bit about, let me show you here, this particular list. This is straight from the iShares.com website. It's called the Around the World PDF. You can go Google it if you'd like. And these are the iShares for different countries. Now, we're a futures trading room. We want to trade the indices of many countries, preferably with the leverage of futures, but sometimes we're going to see moves in other markets and other equities markets that we don't necessarily have a futures contract to trade. In that case, we take the same kind of analysis that we do in, say, the Dow, and then we might apply it to the DAX via options in the EWG. So right now, one of the questions I get a lot of is, the coronavirus. So what does that coronavirus mean to other economies? Just the other day, we heard Canada talk about, yes, our economy will be impacted. Japan said, yes, our economy will be impacted. So which countries could be affected, and what country ETFs, right, could we focus on? And that's really what this is all about. So the first place we can start is really simple. It can just be proximity. You know, it can be actually sort of the epicenter of it all, China itself. It can be economies that are proximity-wise very, very affected and close to China. So the first place I'm going to start is with that geographical proximity. The other place we can move on to is the relationship in terms of China being whose largest trading partner. That immediately brings up names like Australia and New Zealand, where China is their number one trading partner. So in a lot of cases, most especially in Australia and New Zealand, I've been short their currency via futures and Forex since the corona outbreak. I could see the movement, and it was probably some of the easier action to trade than, say, even crude or copper, which kind of made a reversal rather than a continuation of a downtrend like we had in New Zealand and Australia currencies. So I'll start with these kinds of scans. We can look at even Indonesia, Malaysia, right? Where else can we look? Just anything, again, geographically related. Then we can look at, again, trading partners. Think Australia, think New Zealand, think Germany, right? What's going to happen to the German market? And so these are places, and I'll take note of their ETF symbol, and then I'll take that on over to the charts. And the one that today triggered and we put a trade on via puts and sent out an alert, and let me give you an idea of what we did with this. This was the EWH. We bought the March 20 puts, the 24 strike. Why the 24 strike? That puts us at the money. And it was trading at the time between 55 and 65 cents, 10 pip spread. We can easily go 60 cents, get a fill, or sit at 55, which I believe would have been unfilled. And right now it's trading at about 62.5 cents. So today's the day we can take advantage of that move higher right into this zone of resistance. Okay, so that's the kind of thing that when you have a futures trading outlook and you realize that there might be alternatives to the indices, the ETFs are excellent, sort of very similar mindset, very similar composition in terms of heavy weight, but exposure to other countries' stocks that allows us to use the same approach that I would use to, say, buying puts or calls in another market, the same we've been buying calls and, say, the QQQ on pullbacks. I'm looking for buying puts on bounces and things like these names that are most definitely going to be affected and continue to be affected by the production slowdown in China, and certainly, of course, the health scare. So something to think about. I hope this helps. Use this process, and I'll see you in the next update.